Hey guys, are you looking to buy a foreclosure, short sale? Do you think that there's going to be a lot offered during the pandemic? Possibly, or wait till you hear this. For those that don't know me, my name is Robert Yusufov, branch manager, FM Home Loans, lending in New York, New Jersey, Pennsylvania, Florida. And as many of you have seen, the housing market is already booming. There's not enough inventory. I got a lot of investors that are calling me and saying, yeah, we're going to hold on. We're going to wait until things calm down a little bit because there's going to be a lot of foreclosures that are happening once the forbearance period is over. The Biden administration, through the cfpb, Consumer Financial Protection Bureau, this just came out about 3 days ago. So after analyzing it, I want to bring you the latest as to what they're offering. By August 31st, and again, this is a proposal for right now, but this will blow your mind. By August 31st, when the first batch of forbearances are supposed to be coming through, and again, there's about 3 million loans that are supposed to be resetting, or resetting meaning that for people that couldn't pay during the pandemic, servicers, banks have offered a forbearance protocol basically where they don't report you late, but there is some kind of reporting done on credit bureau level where you're in a forbearance, you're in deferment. Every single bank called it differently, and I made previous videos about this. But why it's important right now is for those loans that were to be resetting, where people are supposed to be paying back, what if you can't pay back? Then that's when the bank is supposed to start the foreclosure proceedings. So by August 31st, it was supposed to be the first batch. But what the Biden administration is proposing to do, and again, why this is so wow, is let's just say that you have 10 years into your mortgage and you couldn't pay for your mortgage, you lost your job. I understand that there's been many reasons, but let's say you're 10 years into your mortgage. What they're proposing is to reset your mortgage, adding another 40 years onto your term. So the 40 years is not a total 40 year, but it's 40 year on top of whatever you had, or resetting it back to a 40-year term. So you pay 10 years into your loan, now it's a 480-month amortization, and this may look like a benefit right now because your payment is going to be coming down, but what you're doing is essentially, remember, if you take out a regular 30-year term, let's say you borrow $500,000 at around 3%, 3.5% interest rate, over a 30-year period, that $500,000 means you're paying back about double, maybe sometimes double and a half, depending on what the interest rate is at the time. But you're now paying back $1 million plus on $500,000 amount. But if you extend that to a 40-year term, it may be helping you in the current time frame, but you're going to be paying back triple of what you borrowed. So to banks, this is beneficial long term. It looks like it's beneficial right now. Payments are definitely coming down. But what does this mean to you? You're going back into the terms of modification. If who recalls back in 2008, 2009, when the crash happened, banks were offering modification periods. Once your loan was modified, some people are taking modifications because they need it. And this is not judgmental. Listen, some people need it, some people lost their jobs, some people can't make the payment. But what happens is when programs like this are offered, other people just jump on a bandwagon. Hey, if everybody's doing it, why not? Let me do it as well. It affects your future lending capabilities. At some point, they said if you modified your loan, you can't do another refinance for 4 years, or you can't do another refinance for 7 years, depending on what kind of modification you did. This is the same exact thing that's being offered right now. So again, there's about $1.7 million mortgages that's supposed to be repaid. So how many loans are really going to go into foreclosure? Some experts are saying there's going to be 70%. Some people are saying 50% loans are going to go into foreclosure. Some people are saying 10% will go into foreclosure. But with this Biden administration new rule that they're proposing, there aren't going to be any foreclosures. Property prices are still going to be continuing to go up. Everything that you're investing to right now, it's cheap to invest because the rates are so low. But for every percent that the rate goes up, and we're already seeing the rates come up from mid-February to this is beginning of April, the rates have come up by at least 0.5 to 0.75%. For every percent the rates go up, you lose about $100,000 in pre-approval power, which means if you're qualified right now for $500,000, if the rate goes up by 1%, that $500,000 just turned into about $400,000. So your purchase power is lost, therefore your monthly payments are higher. That's why everything has to be done in the right time. If you're looking to buy a property, do it now. Don't wait for the inevitable to happen, because this might change everything. So again, it's like if they're going to offer this 40-year mortgage that they're planning to extend for people that can't pay, people aren't going to be foreclosing. The monthly payments are going to be cheaper. Yes, the borrower or the client is hurting themselves in the long term, but for the short period of time, it will help. But this will be a complete bailout. This will be a bailout like never before. It's like you avoid foreclosures. Nobody can get thrown out. There's nothing that says what benefit they're providing to landlords at this time. But again, for the purposes of helping the homeowners who can't pay, if your mortgage gets converted to a 40-year term, your monthly payments are cheaper, it's more affordable. And the most important thing that the CFPB is saying is the banks and the servicers will have to offer this at no cost, at no fee, no closing costs, no fees. Basically, it's something that the servicer will have to get done. So there's going to be another problem later on, as there was in the beginning of the year, with servicers. How are they going to be doing this? How is it financially beneficial? But again, it will have to be offered because it's under CFPB. So if people were getting the forbearance, if there was proof that was required, and again, everybody's different, but if there was proof required, half of the people in forbearance wouldn't be in forbearance right now. I've had people call me saying, hey, can I go into forbearance? Or the best part is, after we close, can we go into forbearance? No, not really. If you're closing and you have the ability to pay, you have to pay. But there were people that were asking that. I've had comments on YouTube. I had comments of people asking, like, can I start forbearance as soon as I close, even though I qualified fully for the loan? And that's why forbearances happen. So banks were giving forbearances to people because they said they're in a hardship. But if there was proof of hardship, not as many loans, not as many mortgages would be in forbearance, so things may have been different. But again, with proof, it could have been different. But with the loss mitigation procedures of the CFPB, they're making it mandatory. So if, again, you have a 15-year mortgage, they will convert into a 40-year term with whatever the balance is. The interest rates haven't been discussed yet, but with a 40-year term, your monthly payment is going to be much lower. Therefore, the foreclosure will be a little bit less inevitable, or just it won't happen. So you get a job and you get caught up. Question is, will it happen? Will it pass? Again, this is just a proposal as of right now, but if it does pass, what does this mean to you? How will it impact the future lending? And just, again, if you are planning to take this, will you get a mortgage in the next 4 years? Will you get a mortgage in the next 7 years? Will there be rules put in place that if you have this COVID foreclosure prevention or this loss mitigation or whatever it is that they worded in the future, when is the next time you're going to be able to refinance? When's the next time you're going to be able to borrow anything? Technically, they're not supposed to report lates on the credit, but we all seen that every single servicer treats it differently. Every single servicer words it differently. So something to consider. I will definitely keep you posted on this as it comes along, but it was just such I don't know, fascinating is the word, but it's just mind-blowing as to what can be done with this potential bailout, if it will actually go through, and what will it mean to you. Questions, comments, love to hear your thoughts on it. But yeah, 40-year mortgages, 480-month amortizations, lower monthly payments, proposals where it has to be done as mandatory by investors. Will this save the foreclosure bailout? Will this be the foreclosure bailout? Will this save the people that are currently not paying right now? And what will it do to the people that are paying? What will happen to the landlords? What will happen to the people just in general? Still unknown, but this was pretty interesting. So I wanted to share that. Would love to hear from you. If this was valuable to you, if you found it important, please share it with a friend. Would love to hear any kind of questions. But again, mortgage rates are incredibly low right now. If you haven't taken the refinance option yet, if you haven't taken the cash out on your property yet, great time to do it while the rates still remain low. Questions, I can be reached at 718-969-7100. Robert Yusufov, FM Home Loans. Have a great day, everyone. Take care. Bye.